Today in the grain markets, soybeans were mixed. China suspended its U.S. purchasing. That put a damper on any kind of significant rally or put a lid on anything going forward. Now, the expected number for the crush was going to be higher, and that would have been one positive thing, but everything else is relatively bearish. Weather is good, so there isn't really an increase in exports or anything like that. So China was really the big thing that we are going to be watching, and I suspect that that's what's going to be happening for the next week or so. Corn was also lower. Planting is at 98% complete. That's putting a damper on it as well. I think that we're just watching to see if we can get these talks to finish so we can kind of digest this into the market right now. Some of the funds are actually still adding to the short position in corn. That's hurting it a little bit, and that's really keeping these market right in the same channel that we have been in for the last really since April 15th. That's been like the 310 to 330 mark, and every time we get to one end or the other, the market pulls back. Also in wheat, that really did pull back. The Ukraine exports are 17% higher than last year. When those numbers come out, it just put more pressure on the market, and of course we're staying right around that $5 benchmark. And until we get anything else new, it's going to be difficult for the market to really give us any direction one way or the other. So all eyes are going to be on the White House, on what's happening. Also, the outside markets are affected by the crisis going on in the U.S. Maybe that will stall a little bit of the economy's opening up, and any kind of domestic demand could be stalled for a little while, but we expect that to open up again. It hasn't really had much effect on the grain markets right now, but they still are in a sideways consolidation mode, and it looks like that we're going to be that way for at least the next couple of days.